Hey everyone, welcome back to Corporate Decoder. Today MZYX-U just filed an 8K and I am seeing a big change that units holders need to know about. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about when the separate pieces of the company's offering will start trading on their own and why that matters for you. Alright, so MOZAYYX Acquisition Corp, or MZYX as you might know it, is a company that did an initial public offering. Think of it like this: when you buy into a company like this, especially a special purpose acquisition company or SPAC, you often get a bundle of things. In their case, when they first went public, investors bought units. Each unit was like a package deal, containing one Class A ordinary share of the company, and then a little piece of a redeemable warrant. Specifically, you got 1/4 of a redeemable warrant for each share. Now, these shares are pretty standard. They are called Class A ordinary shares and have a very small face value, just $0.0001 per S hair. This is common for companies going public to keep things simple. The other part of the package was the warrant. A warrant is basically an option to buy a company's stock at a specific price in the future. In this case, each whole warrant gave the holder the right to buy one ordinary share for $11.5. What is important here is that these warrants are redeemable, meaning the company can call them back under certain conditions. And you only get whole warrants, no fractional ones here. So on the 17th of April 2026, MZYX announced a pretty significant change. Starting the 20th of April 2026, holders of these units will be able to separate them. This means you can choose to keep the unit as is, or you can split it into its individual parts, the ordinary shares and the warrants. Currently, these units trade on the New York Stock Exchange under the ticker symbol MZYX. This ticker symbol represents the bundled unit. Now, after the 20th of April, the individual components will start trading separately. The ordinary shares will trade under the ticker MZYX, and the warrants will trade under the ticker MZYX.WS. This is a pretty common step for SPACs after their initial offering period. It allows investors more flexibility to trade the different parts of the investment based on their own strategies and market views. If you are holding these units and want to separate them, you'll need to work with your broker. Your broker will then need to contact the company's transfer agent, Continental Stock Transfer and Trust Company, to make that happen. They handle the administrative side of splitting those units into shares and warrants. This filing also lists the securities registered with the Securities and Exchange Commission. We've got the units under MZYX-U, the Class A ordinary shares under MZYX, and the warrants under MZYX.WS. All of these are trading on the New York Stock Exchange. MZYX is identifying itself as an emerging growth company. This means they can take advantage of certain regulatory accommodations for a period of time after going public, which can ease the burden of compliance as a newer, smaller public company. They have also elected not to use the extended transition period for new or revised financial accounting standards, meaning they will adopt new accounting rules at the same time as other public companies. This particular filing is under Other Events, which means it is reporting something important that happened outside of the more regular financial reporting. The key event here is the announcement of this separation of units into individual shares and warrants. The actual press release detailing this announcement is included as an exhibit to this filing. This is where you'd find the official word from the company. Finally, as is standard for these filings, there is a section for exhibits. In this case, Exhibit 99.1 is the press release. There are no financial statements included in this specific 8K, as it is not a quarterly or annual report focused on financial performance, but rather on corporate events. The report is signed by Benjamin Zucker, who is listed as the Chief Executive Officer of MOZAYYX Acquisition Corp. It is dated the 17th of April 2026, the same day as the announcement. So, what does this all mean for investors? This is a pretty standard move for SPACs. It often signals that the company is moving towards its next phase, which might be finding a target for a merger or acquisition, or it might be preparing for other corporate actions. The ability to trade shares and warrants separately gives investors more control. Someone who is bullish on the company's future might buy the shares, while someone who wants to speculate on warrant price appreciation, perhaps betting on significant stock movement, could buy the warrants. Conversely, if a holder is less optimistic, they could sell the units or the individual components to cut their losses. Historically, SPAC units separating often means a period of increased volatility as the market digests the standalone value of each component. It is a normal step in the life of a SPAC, but it is always good to be aware of what is happening with your investment. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, smash that like button, subscribe for more, and join our Discord community.